Can this movie theater's chain stock help some of its shareholders become millionaires by 2030? Let's find out. What's up, everyone, and welcome back to AM World. This is going to be a fun little video where we are going to discuss how AMC can and will potentially make you a millionaire by 2030. Let's get going. Before we move on, let's find out what an AMC is. An asset management company, AMC, is a corporation that invests pooled funds from client assets in various investments such as equities, bonds, real estate, master limited partnerships, and others. AMCs offer much more diversification and investment possibilities to clients because they have a wider pool of resources than an individual investor could access on their own. Buying for so many clients helps AMCs to take advantage of economies of scale, typically resulting in a price reduction of their purchases. Pooling assets and paying out proportional returns also helps investors to circumvent the minimum investment requirements that are frequently required when acquiring securities on their own, as well as their flexibility to invest in a broader range of securities with fewer investment funds. In 2020, AMC endured unimaginable anguish as the COVID-19 pandemic caused the theater to shut down everywhere. It resorted to a considerable share insurance to get through this challenging period. The number of shares outstanding at the end of June 2020 was just over 104 million. The company now has 513 million shares available for trading. Unfortunately, AMC issued the majority of these shares before the stock price increased. As sound and video technology have evolved, home theaters have grown in popularity. This reduces the need for moviegoers to visit theaters. AMC Entertainment drew retail traders' attention earlier this year as it rode a meme stock wave, rising from a low of just under $2 per share in January in a high of almost $72 per share in May. Its current pricing in the low 30s per share represents a drop of over 60% from its highs. However, given that it is still trading 16 times higher than its January low, one could wonder if it has the potential for something greater. Nonetheless, the pandemic continues to impact revenue during the first 2 quarters of the year. AMC's revenue for the first 6 months of 2020 was $593 million, a 38% decrease from the previous year's first 6 months. Conversely, with 62% lower operational expenditures over that period, the corporation slashed its net loss by 2/3 to $911 million. The online investing forum Wall Street Bets on Reddit has spurred conversations among dynamic group of AMC bulls. Their support for stock aided its rise to record highs in May. However, the fact that the company has lost most of its gains since that time may indicate that these traders have minimal influence. However, we currently live in a society where people can turn to various forms of entertainment, such as online videos and expanded gaming alternatives. By 2030, such tendencies are projected to become more pronounced. Additionally, the current stock price indicates the difficulty in transitioning small stockholders into millionaires with this stock. Assume a trader is lucky enough to purchase 5,000 shares for $2 a share in January, resulting in a $10,000 beginning position. To actualize a $1 million investment, that investor would require AMC to raise at least $200 per share. Furthermore, this scenario excludes people who invest $10,000 in AMC today. To become a millionaire, the share price would have to grow beyond $4,000 per share. Even if AMC stock continues to double in value 4 times in 7 months, as it has since January, obtaining a $1 million holding by 2030 is an attainable goal for any investor. However, doubling values at $2 per share is significantly easier than doubling values at $32 per share. Furthermore, with the aforementioned business factors working against AMC, it isn't easy how the company will generate the sustained sale and earnings growth required to achieve and maintain such levels of development. Now let's have a quick view of the AMC stock forecast. As AMC stock is a turnaround investment, it makes it logical to emphasize relative strength. A relative strength rating of 99 on a scale of 1 to 99 indicates that the firm outperformed 99% of all companies in the IBD database during the previous year. So is long-term performance outstanding? Indeed. Meanwhile, the accumulation distribution rating is a solid A on the scale of an A to E. On the weekly chart and on in-market Smith, the relative strength line rose again after falling steeply. The blue RS line compares the movement of the stock or EFT to the S&P 500. When the stock breaks out of a new base, prefer to see the RS line run to new high ground as well. This signifies that a stock is currently outperforming the market as a whole. Over 2 months earlier this year, AMC constructed a boxy cup-like base. That's more than enough time for a strong cup pattern to emerge. This pattern generates an appropriate purchase point of 10 cents above the cup's March 18 left side peak of 14.54. In the case of AMC stock, the proper entry was 14.64. So now the question that might arise is it a good time to buy it, or is it a sale? AMC stock, in effect, performed a significant breakout twice in a short period of time in May. Before coming to a new buy, AMC had to surpass 14.6, a 20% increase on May 25 propelled shares past the appropriate buy mark. The 5% purchase zone rises to 15.37, causing the stock to extend quickly. Always keep your risk under control. Not all breakouts are successful, especially when the stock market's uptrend is under pressure or entering a slump. When is the most fantastic time to buy? When it comes to stock investment, you want the wind at your back rather than your face. This piece advised in May that investors keep a careful eye on how AMC stock handles potential upside resistance near 20. Indeed, the price behavior after that fantastic week concluded in Jan. AMC executed a second breakthrough on May 27, slamming through a 20.46 purchase target with vigor from that vantage point. On May 27, shares whizzed by this entry. AMC refused to look back for a while. Still with gains of up to 501% in just 2 weeks, it seems logical to lock in at least a portion of the earnings. Now let's look towards AMC's recent action. AMC has now declined as much as 60% from its all-time high of 72.62. So it does not trade at an IBD-style entry point. Those looking to go out long should keep an eye out for forming a new bullish chart pattern. For a time, the activity resembled a rare high tight flag. That is no longer the case. A subsequent effort to re-enter about the 10-week moving average, which is now nearing 43, could prompt a new follow-up purchase opportunity for the astute investor. AMC is not currently a buy. This might change if shares continue to rise about the 10-week moving average with vigor and volume. Yet, 8 weeks after the peak, it appears that AMC is constructing a new base. So will AMC be able to create millionaires? Yup. Few investors expect AMC to hit $72 per share early this year. As a result, given enough momentum, it is not realistic to argue that a $200 per share or even a $2,000 per share is impossible. So once you finally bought a stock with promising prospects, remember the golden rule of investing. Keeping your losses in the minimum keeps you in the game for the long haul. On a final note, know that the crypto market is highly volatile, and by the time you watch this video later than the time of its upload, the prices might have switched to a whole new range. Be mindful to do your own wide spectrum research before any sort of investment. So guys, this is it for today's video. What do you guys think? Will AMC help you become a millionaire by 2030? Let us know in the comment section below and stay tuned for a daily dose. Before you leave, hit that like button, subscribe to our channel. Until the next time, bye-bye.